Are we live? Give me a second, everybody. Are we live? Give me a second, everybody. I'm going to... Alright, we are live, right? Okay. And good morning. Alright. Good morning, good evening, good afternoon, students and traders. This is Mike, the FX boss, broadcasting you live on YouTube and other streaming platforms. Welcome to the Darwinex Trading Academy. Independent insights, everybody. Just to be clear, I do not represent Darwinex broker. Okay, this is the independent insights. Darwinex, yes, it's a partner. Okay, but I don't represent. I'm not their employee. I don't work for them. You know, and okay, just to be clear, not to confuse the two things. Yeah, because sometimes I receive emails. You know, oh, Darwinex this. I'm not Darwinex. You know, it's. Shantana, hello, Olga, how are you? Everybody, never forget, trading is a learnable skill. The goal is to bring you from zero to a millionaire trader in 3 years. Subscribe to the channel, click the bell. You are going to graduate from this course when number 1, you have your chart set up and ready for trading, everybody. Number 2, you have your strategy in place. You understand how you win, how you lose. And I promised you J4X, right? Give me a second. And number 3, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. Risk disclaimer, this stream is not trading or investment advice. We're here to learn. Okay? Some of you, yesterday, everybody, hello David, how are you? Everybody, some of you opened yesterday the Darwinex Zero. Send me an email. Okay, because I'm going to connect you on Skype with other traders. Okay, I'm also going to give you a book for free. Okay, everybody. So if you, it's down in here, right? If you want to learn fast, you know, maybe not for the complete beginners, but if you are 6 months, 1 year, and if you can spend 38 bucks, okay, then. You know, just tell me, it's because you're going to connect with other traders on Skype. And lastly, for question homeworks, you have my Gmail and Skype, everybody. And if you didn't receive the free manual, again, send me the email to the Gmail, right? It's for free, it doesn't cost you a cent. Alright. Today we are going to learn, everybody, one of the most important concepts you could ever learn in the Forex course 101. Give me a second, I need to open. Okay, let's go in here. I should do this on next time. I'm going to open J4X3. Yes, you can stay on TradingView. It's not a problem, everybody. Okay. Today we're going to learn the most important concept. And everybody, open NZD-CAD, right? Open NZD-CAD, and open the daily chart. NZD-CAD daily chart. TradingView, J4X4, J4X3, it's all good, okay? Now that you open the daily chart, you must go on the monthly chart. And I don't have enough data in here, so I need to go settings, preferences, general, and make it UTC, not Easter, UTC, okay, UTC, there you go, apply. Alright, okay, everybody. So far, everybody, you're going to graduate from this course when you have your chart set up and ready for trading. So far, you should have on all your currency pairs that interest you, you should have the monthly bands. Agreed? No, there is no right or wrong, you know, so we're going to have the... Alright, where is the... There you go. The monthly bands. So this is the upper band. Down here, this would be the lower band. Okay. And now we can go from the monthly, we can go to the daily chart and find the upper band. Okay. No, there is no right. You can stay again. Somebody is asking on the other streaming platform. You know, TradingView, JForex. Both are. I mean, if you ask me, TradingView it's the best charting software all around because you have what JForex doesn't have alarms on trend lines. Okay. On TradingView you have alarms on anything you want basically. So as you get more and more professional, then JForex maybe becomes, as a charting software, not as a trading platform, but as a charting software maybe becomes obsolete, you know. Make sense, everybody? It's not a recommendation, it's an opinion. Okay? Now, what is the market? Everybody, this is the most, please download this recording, and I mean we are live, but after the class it's over, download this recording and rewatch it a few times. Okay? How the market moves. You could have an uptrend or up market wave, everybody. Okay, so we're going to put the text up. Give me a second. ABC. So I need to make it bigger. There you go. And give me a second, everybody. Here, black. There you go. And out of here, so text. You could have an uptrend, or up market wave. Everybody, makes sense? Uptrend or up market wave, and then you have a downtrend or a down market wave. Okay? Alright. How the market moves, everybody. This is, remember, you are not a trader yet, you are an analyst, so everything starts from the monthly band. Alright? Everything starts from the monthly bands, and it starts with an extension. If you can learn today how to understand extension, you are going to be better equipped than 95% of your friends, okay, on how to read a chart. Sounds good? Okay? Yes, 50. Somebody's asking, boss, on the 15-minute too. 15-minute too, everybody. Now this is where, I'm sorry to tell you, but I'm looking for traders, alright? I'm going to be blunt with you. I'm looking for traders. I'm not doing this for money. As a matter of fact, it's for free. I'm looking for traders. Most of you, or at least a grand majority of you, are not listening to this rule. Okay? If I'm telling you everything starts from the monthly bands, 15-minute chart, 5-minute chart, everything starts from the monthly bands. Okay, does this make sense? I don't say, you know, I'm not going to say, do you agree with me? Does this make sense to you? Everything starts from the monthly bands. Okay, everybody? So, we are here, this is the monthly band, and you could be on the daily chart, weekly chart, 15-minute chart, 4-hour chart, whatever, or up in here, you know, this could be the upper band, and we are on Ins decade, so we're going to have the upper band. Everything starts with an extension, okay? Now, when the market hits the lower band, the market is going to start with an up extension, and you are going to see this with your eyes when the market is going to make higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, like this. Alright, everybody? When the market hits the upper band, is going to start just in reverse with the down extension. Market is going to make lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay? So it's everything starts with an extension. 15-minute chart too. Alright? Yes, when you're going to study the charts, and I hope that some of you are going to study the charts with what you are learning right now, you know, the bigger the time frame, then the easiest it is, because you have not a lot of action. Does this make sense? On the daily chart, every candle, it's a day. If you're going to study the 15-minute chart, you know, from today to tomorrow, maybe, you know, the uptrend, it's a downtrend, and vice versa. Okay? Now, once the extension is over, the market is going to stop extending and is going to start what we call a retracement. It's going to make lower low, lower high, lower low, lower high, lower low, lower high. So better to color this in yellow. Remember, it could be the market wave or the short-term trend, which is not relevant right now. Just focus on how the market moves, alright? Everything starts from the monthly bands. 5 minutes too, and everything starts with an extension. So lower band, you're going to see the market making higher highs, higher lows. Then the market is going to pause and is going to go into a retracement, making lower lows, lower highs. Okay. Now from the upper band, ends decade is going to start make a down extension. Then the market is going to pause, is going to make higher highs, higher lows, higher highs, higher lows. What is this called? Everybody type in the chat, what is this called, the red one? It was making lower lows, lower highs, the green, but then it stopped extending and start retracing. What is this called? The market must move. It goes from extension to extension. Everybody give me a second. Extension, retracement, exactly, retracement. So here we have retracement, extension, retracement, everybody. Okay, and then lastly, what I cannot how to, Olga, retracement, I cannot how to tell you. If you can learn this, you are going to stop losing. Maybe not making, but you're going to stop losing, okay? The most important, you have two cardinal concepts in the Forex course 101. Like the most important fundamental, number one, the higher time frame controls price action and movement on the smaller time frame. And the second one, the market, in order to move, it must wave. It's a must. It's a rule, it's a law, it's a fact. Everybody, can you doubt a fact? You know, the market, in order to move, it must wave. It cannot go otherwise. Does this make sense? The market must go. You know, it starts with an extension, then it must go to a retracement, and it is going to go, whatever you are trading right now, hopefully on a demo account, the market, it is going to retrace. And then it must stop the retracement and must go into the next extension, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So the up market wave or an uptrend. But I'm going to explain, let's go step by step. Up market wave, extension, retracement, extension, and from the upper band it must go down to extension, retracement. So it's going to stop the extension and stop the retracement, and is going to change the short-term trend, the red one, and is going to make now lower low, lower high, lower low, lower high, and is going to start the new extension. All right? Any questions so far? We are going to go on the chart. Okay. Homework. Already, you want to be a millionaire trader. Homework. chart the, not chart, put the market wave, put the market wave on your charts. Monthly / weekly / daily / 1 hour, 2 hour, 4 hour. Boss, what about the 15 minutes? 15 minutes too if you want, but the most likely it's monthly, weekly, daily, 1 hour, 2 hour, 4 hour chart. That's the homework. Okay, everybody? This is how the market moves. It cannot move otherwise. Okay? Yesterday we've learned different market behaviors. So of course, in between in here you could have consolidation, and in between you could have the chaos, but nonetheless all of those mini patterns, if you want, all of those mini patterns, you know, for the lack of a better word maybe, I don't know, but anyways, the market wave, the yellow one, is going to resume and is going to move them in the market wave way. All right, all good in here, everybody? Any questions? Now open NZDK daily chart. All right, and we are starting from the monthly band. Okay, when you chart, everybody, should you start with the first circle? Should you start at the second circle? Should you start at the third circle? Should you start at the fourth circle? Or should you start at the fifth circle? Where should you start to chart your market wave? Let's see, how did you learn Forex course 101 lesson number 1? Should you start at the first circle, second circle, third circle, fourth circle, or fifth circle? This is the foundation. If you don't get the market wave concept, then we are going to have difficulty in building a strategy. Olga says first circle. Anybody else want to take a chance? When it comes to the advanced institutional trader course, or not, anyway, we have the part of the advanced institutional trader course. It's the Fibonacci mastery course. It's inside. It's for free. Okay, I give you my Fibonacci strategy that it's making me money for the last 15 years. Guaranteed, confirmed, no doubt. Okay, it's nothing special in the end, but Fibonacci, you've heard this already, Fibonacci as a tradable pattern has an edge, meaning it wins 7 times out of 10. Every 10 Fibonacci's, we need to be more specific, every 10 Fibonacci's that you are going to trade, the original Fibonacci on the daily chart has a tradable edge. It's going to win 7 times out of 10. Every 10 you're going to have 3 losers, but then you're going to have 7 winners. Statistically proven. I'm going to show you. I'm going to, like with the finger, we're going to go on all the 27 currency pairs, and I'm going to show you winner, 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 loser, winner, winner on the Fibonacci. Olga, Shantana, and David, guess how many student traders make money with my strategy that has a proven edge? What do you think? Type in the chat, percentage-wise. 50% of your students, your strategy has an edge, 50%, 70%, 10%. I'm going to tell you, I'm just trying to, and I'm going to explain you why. I give you my strategy, you can copy it, I mean, made me tons of money already. Olga, how do you know? Shantana 70, I would wish, because I'm looking for traders, only 2%. make money with buy strategy, that is nothing special really. Only 2%. Why? Why are we having this conversation? No, it's not for me bragging how good I am. It's for you to understand the reason is the student trader didn't get this skill today. The market wave, how the market works. It's mental. Well, yes it is, but we're talking about technical skills, Santana. Okay? If you don't learn this skill today in the correct way, how this market moves, then you are going to have issues with Fibonacci's, with trends, with the weekly plan when you're trying to predict how the market is going to go to Monday to Friday. Make sense, everybody? This lesson is the lesson. Okay? And if you learn well, you're going to build a good strategy, whatever you're going to build. Okay? Otherwise, okay, everybody? This is why we're having this conversation. Only 2%, every 10 traders, student, only 2 make money with buy strategy. And again, it's not complex. Oh, they don't. It's not that, I mean, nothing special really. Okay? In 100 students, only. In 100 students, how much is 2% of 100? 2. Alright, 2%. Okay, everybody, so Olga said number 1, and the answer is no. Everybody, the first lesson we talked about when the market hits the upper band, right, then it's going to start reversing. Okay, and when you start charting, it's the absolute high, the highest high. Okay, everybody, so the correct answer, where should we start charting? The answer is the 4th circle. I like your lesson very much. I appreciate, hopefully you're learning, everybody. Okay, I'm looking for traders, don't forget, I'm not selling you a course or whatever. That's why sometimes, right? Okay, the correct answer is number 4, everybody. Are any questions why this is the correct answer? Are there any questions why number 4? Yes, boss, I have a question why number 4. If you go on circle number 1, or if you go on circle number 2, or if you go on circle number 3, did the market went from the upper band to the lower band? Did the market push down to the lower band? No, right? What about the 4th circle? Can you see it, everybody? I should compress the chart more, but okay, this is the highest high, this is the absolute high. Starting from here, you're, yes, but everybody simplify. If this would be the case back in time, you don't see the future. Yes, alright. But now you see the future, right? Okay, look how I mean, a lot of price action already. And you need to build your chart, everybody, and you have the homework: chart the market wave, put the market wave on your chart. Okay, this is the starting point. This is where the market stopped going up and finally start going down. Olga, does this make sense? Always look for the absolute high, everybody, or always look for the absolute low. All good? Now I'm going to leave this circle up in here. We are going to zoom in, everybody. Okay, and we are going to look for short-term trends. Listen up, listen up, listen up. We are going to look for short-term trends when a downtrend is going to become an uptrend. and then an uptrend is going to become a downtrend that is going to make a lower low, and then a downtrend is going to become an uptrend with a lower high, and then an uptrend is going to become a downtrend with another lower low. Boss, can you repeat please? Starting from the absolute high, we are going to look for a downtrend that is going to turn into an uptrend. Alright? Downtrend turning into an uptrend. And then we're going to look for the same uptrend who turned into a downtrend and provide us with the lower high compared to the previous high. And then we're going to look for a downtrend that is going to turn into an uptrend again, providing us with the lower low. Okay, and then we're going to look for an uptrend again. Okay, that is going to turn into a downtrend, and having those highs and lows, you are going to have the market wave. The same. No, the market wave has nothing to do with the Fibonacci's. I'm not sure, Olga, if you are asking the same with the Fibonacci. Don't confuse everybody, the market wave with the Fibonacci. Those two are two different patterns. Okay? So, I'm going to start connecting. Remember everybody, not every high and low is relevant. Okay? Now, do we agree everybody that the market starting from here, it made lower low, lower high, lower low, lower high, lower low, lower high, lower low? Do we agree? And then do we agree that the market made higher high, higher low, higher high? And do we agree then the market made a lower low, lower high, lower low, lower high, lower low, lower high? Type in the chat. Do we agree? And then do we agree that the market made higher high, higher low, higher high, higher low, higher high? Give me a second. Like this. Okay, so I'm trying to learn how to chart the market wave. Okay, so if I connect this high with this low, and this low with this high, and this high with this low, and if I put a vertical line on the low, then I can say, well, from the vertical line to the left, it's all good. Agreed, everybody? If I'm going to connect high to low, low to high, high to low, do we have a down market wave? David says agreed. Alright? Now, but then, what happens then? From the vertical line on the right, we have a problem, don't we? From the vertical line on the right, we have a problem. What's the problem? The market made a higher high. And then, from making higher highs, higher lows, the black color, then do we agree that the market made lower low, lower high, lower low, lower high, lower low, lower high again? Do we agree? So, this concept does not apply now to the live market. Make sense, everybody? But because it's a fact that the market made this high and pushed to the lower low before it made, so I'm looking for change in the short-term trend, right? And the market was pushing down and making lower lows, lower highs, lower lows, lower highs down to here. Okay, then we need to readjust this market wave to satisfy this concept. Does this make sense? This takes some practice, but in the beginning was like this, then it becomes easier on Ins.Cat. Okay, everybody? Therefore, the market wave that I'm charting is going to be high to this low, low to this high, and high to this low. Okay, everybody? So I'm going to color code this in yellow. Alright, the yellow one is the correct market wave. Does this make sense? You are learning right now that not everything that happens inside, higher highs, lower lows, consolidation, it's relevant. But can we all agree that from here to here the market was making lower lows, lower highs? From this relevant low the market was making higher highs, higher lows, retracement. And from this high, the lower high, okay, the market was making lower lows, lower highs, so it was in an extension again. Do you agree on that? Long story short, if you want to write this down, the relevant highs and lows on the market wave are the border lines between extensions and retracements. Boss, can you repeat please? The relevant highs and lows, if you are going to chart the market wave in the correct way, the relevant highs and lows are the border lines between retracements and extensions. So if I would connect the circle high, and it is, or if I would connect the circle low, and it is, I would not have the correct down market wave, agreed? Why not? Look at the circles. Look at the circles. Does this make sense to everybody? If I can learn today and practice, right? I need to practice the concept that the market must wave, it must go with the extension, it must retrace, and after the extension, a retracement must come, it must retrace, and after the retracement, an extension must come. And it always comes, extension, retracement, this is one, okay? And number two, a little bit more specific, that the relevant highs and lows, you can print this picture out, the relevant highs and lows are the border lines between extensions and retracements. Anything else, it's wrong. Okay? If you chart the market wave in the wrong way, you are going to trade uptrends that are not uptrends, you are going to trade downtrends that are not downtrends, and you are going to buy end of retracements when you know that an extension must come, and you are going to leave money on the table on extensions when you know that a retracement must come. Oh, boss, stop talking, man. My head, it's like this. I know it's a lot of information, everybody. But this today is the lesson. Anything else from the manual, it's less relevant. This is the foundation. Okay? This is price action theory. Okay? Has nothing to do with some are confused with what is the first legs, 9 legs, Elliott waves. This is not Elliott waves. This is not Wyckoff. This is pure price action theory, right? Talk to me, everybody. Are there any questions why we decided to have this relevant high, to have this relevant low, and to have this relevant lower high? Any questions? And we didn't choose to have the circle highs and lows. All good, everybody? Can you do this? Can you do this when you're by yourself? Rewatch the recording after the live stream is over. Rewatch the recording and go and study. And you have the homework. Chart the market wave. All right? Now this was difficult in between. Now it comes easier. All right? Do we agree that from this low we are looking for a downtrend that changed into an uptrend? Do we agree that the market stopped making lower lows or highs, started making higher highs, higher lows, higher highs, higher lows, up to here? and then the market stopped making higher highs, higher lows, which is a retracement, start making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Do we agree, everybody? And then the market stopped making lower lows, lower highs, and start making again higher highs, higher lows, until up to here. Orange this time, orange. And as you see, everybody, let's see if we understand each other. If we all agree that this is the relevant high, lower high on the yellow market wave, if we all agree that this is the relevant lower low on the yellow market wave, which one between those two circles is the next relevant lower high? The first circle or the second circle? Because this is extremely important for you to understand, because you have the homework, chart the market wave on the currency pairs. So this would be the yellow, right? Market wave retracement, extension, the yellow one. And now I'm in doubt. Should I chart the market wave retracement to the first circle, or should I chart the yellow market wave to the second circle? What's the answer? Don't be shy, we don't bite. What do you think? First circle, second circle. How would you chart? You're building your charts. How would you chart this market wave? Boss, those are the same. No, those are not the same at all. See, everybody, everything is the same. It's not. Extension, retracement, extension. Second circle. Excellent. Yes. Second. Okay. Now, I'm the student. You are the teacher. But, teacher, why? Teacher Shantana, why the second? Teacher Olga, why the second? I'm confused. Didn't the first circle made lower low, lower high here? You are telling me it must change the short-term trend, and it was making higher highs, higher lows, and here it stopped making higher highs. The retracement stopped and making lower lows, lower highs again. So why the second circle? Yeah, the second circle is the correct answer, but why? You must understand why the market moves as it moves. You are learning this right now. Therefore, you are going to be able to chart the things in the correct way. So you are going to have an understanding on the reading of the chart. Make sense? When you learn in the wrong way, or you don't learn at all, you would buy up in here, or you would buy down in here, and you would lose. Does this make sense? It starts the next extension. Well, again, my problem, I'm joking with you, but my problem as a student is that the market made an extension in here too. Everybody pay attention not to do, relevant low to relevant high to relevant low, and relevant low to relevant high, and now you have an up market wave. Okay, pay attention with this kind of stuff. Okay, everybody? But why? Deep breath. Deep breath. Number one, the market wave, it's a sequence of highs and lows. Agreed? If you chart the market wave to be an up market wave, this market wave, this market wave break the previous one? No, exactly. This is the only reason. If you would say low, high, I have an up market wave. Wrong answer. For you to change patterns, market wave and the trend, for you to change an uptrend to a downtrend, the downtrend must break the uptrend. The same goes with the market wave. Does this make sense? Some students, and I'm not judging anybody, in the advanced course we're going to learn about homeostasis, psychological subconscious issue. Some students, me too back in time, try to invent hot water out of this science. Make sense? Olga, it has the high. It's the correct because the market did not go up to break the up market high. Yes, correct. Okay, everybody? So when I'm guessing, should be the first circle and the second circle, this, so it made two lower lows, lower highs, and teacher Olga explained to me also it made a higher high and then made lower lows, lower highs, lower lows, lower highs. Make sense, everybody? This is the highest high, similarly to this in here before. Okay, if this high on the left would be, just an example, if this high on the left would be a higher high, we wouldn't have this kind of conversation right now. Does this make sense? Because the market wave, it's a sequence, a down market wave, it's a sequence of lower lows, lower highs. So even though I am, as a student, I'm doubting, and I'm confused, just listen to the rules. Number one, it made lower lows, lower highs here too. Yes, it did, but this was the highest high. Okay, this makes the second circle, the relevant high. Okay, everybody? Therefore, you are going to chart relevant low to relevant high to relevant low. Okay, we are continuing with the yellow market wave, right? Now, some students try to invent hot water, okay, and they are going to say, they're going to move this low to this low, and they're going to forget, some students, and I know some of you, they're going to put this low down in here, and they're going to forget about this low. Make sense? They're going to do this. And when I'm asking, why did you put the low down in here? Why did you left out this low? Oh, the market made a new extension just for 10 pips. So what? So what? There are no rules that are telling you that extension must extend. There are no rules that are going to tell you that the next lower low or the next higher high must be 200 pips. There are no such rules. Does this make sense, everybody? If you would follow the rules to the teeth, you would see lower low, lower high down to here, and then you would see the change in the shortened trend. Higher highs, higher lows. Do we agree, everybody? Do we agree? Do we agree that from the vertical line to the left, the market orange color, the market was making lower lows, lower highs, and then from the vertical line on the right, the market stopped making lower lows or highs, start making hard highs, hard lows? Do we agree? Therefore, try not to invent hot water. Make sense, everybody? You need to pay attention to those details. Okay, what if they are at the same level? Great question. What do you think? Everybody have extension, retracement, extension, and now you have at the same level, you could have 3, right? Consolidation, 4. Everybody, whoops, give me a second. Okay, I need to redo it. So let's say that we have 4 at the same level, right? 3, okay, like this, just an example. Which one is the relevant low? Is the first circle the relevant low? Is the second circle the relevant low? Is the third circle the relevant low? Or is the fourth circle the relevant low? Easy one, right? Now that you can see it on the chart. Great question, Shantana. Which one is the relevant low for you to chart? First circle, second circle, third or fourth? Okay, everybody? Don't try not to invent hot water. There are no rules that, oh, 1 pip, 20 pip. It's a sequence. It breaks the low even for a pip. It's a lower low when you have a change in the shortened trend, when the extension stops and retracement starts. That's the new relevant low confirmation and the correct market wave. This is the low. It's in consolidation. Answer the question. It is in consolidation, but answer the question, everybody. It's a great question. What if you have 2 lows or 4 at exactly the same level? How are you going to chart the market wave? High to low, low to high, high to low. Now, because you don't see the future as you chart the first one, it's easy, right? Of course, this is the market wave low, but then market does this. Olga first. Wrong answer. Don't worry, let me help you. Everybody, I'm having fun with it. Let me help you. If I have an extension called the downtrend in here, if I have an extension, what am I looking for next? There is no lowest one. All of them are, as you said, Shantana, all of them are at the same price. Exactly to the pip. But I'm trying to help you with the mindset, with the how to think. You know, you are in an extension, market making lower lows or highs. All right. So you are expecting and looking for what comes next. Extension. We don't know, but after the extension, what must come? And it is going to come. Javen knows about it. Alexander knows about it too. Retracement. So between those 4 lows at exactly the same price to the pip, which one went into the retracement? David, retracement. Which one from those 4 went in the retracement? The 4th one, right? You could be thinking, oh, all of them. Sure, but the 4th one is going to produce, so relevant high, relevant low, relevant lower high, relevant lower low. The 4th one is going to produce the next. If the market wave is going to continue, the 4th one is going to produce the next lower high. Exactly, the 4th one. Does this make not on YouTube, on the other streaming platform, somebody's typing, boss, this is too much information. Rewatch this recording a few times, download it from YouTube, rewatch it. Okay? You're going to have more questions as you progress, don't worry. Great question, Shantana. Okay? Before we talk about trading, how to trade the market wave, everybody, back in time, if you would not have the knowledge, or if you would have the knowledge, right? If you would have the knowledge, but if you would not obey the rules back in time, this is a live chart, you would see, bam, higher high, circle, circle. Do we have a higher high, everybody? Do we have a change from downtrend and now we have a higher high? Do we? Circle, circle. Do we have a higher high? Type in the chat. Yes, yes, we do have a higher high. I mean, compared to the previous one, right? Looking at the circles, the circle on the right, it's this circle, it's a higher high compared to this circle. Agreed, everybody? Yes or yes? Yes or yes? David says yes. Yeah, yeah, absolutely. All right. So, can we assume that the market stopped extending and start retracing? Could we assume that the market is not in an uptrend, in a downtrend anymore, it's in an uptrend? Yes or no? Yes or yes? Okay, we are almost out of time, everybody. So yes, we can assume. Now, if you would assume like, oh, higher high, then do we agree that most likely, you know, just an example, you would have a counter trend line break in here, and that you would understand, all right, it's not 100% confirmed uptrend, but it's a 75. I have a low, higher high, and now I have a higher low, so let's buy this market. Short term, yes. Olga says yes. Okay. Now, one more golden nugget for you. For the extension retracement, for the next retracement to start, listen up. I know it's a lot of information, don't worry. So I have extension retracement, and now we are in extension mode, right? Okay, we are in extension mode in here. Okay, lower lows, lower highs, extension mode. For the next retracement to come, remember, if you believe that this extension it's over and the new retracement came, then your market wave is going to be like this. Make sense, everybody? So, if the market makes a higher high, you could assume that, oh, the extension is over because the market made a higher high. Wrong answer. Remember, everybody, I showed you the market and I showed you the short-term trend, extension, retracement, extension, and I've told you that in here between you're going to have consolidations, in here you're going to have pennants, in here you're going to have the chaos in between, just for you to understand that none of this is relevant for the extension and or retracement until for this extension to be over. Now this is the most important part. For this extension to be over and you start thinking, oh, now, so we're talking about timing. Now I'm looking for a retracement. Before you look for a retracement, the market must confirm the new extension. Okay, what does this mean? For the market to confirm the new extension, it must break the previous relevant low. Does this make sense? Boss, can you repeat, please? For you to understand and say, oh, this is a relevant high, the market must break this low. Does this make sense? Until the market breaks this low, this retracement, it's not confirmed yet. Why not? Extension, retracement, extension, retracement in here. Okay, give me a second, everybody. It's not that difficult, believe me. So, relevant high, relevant low, relevant high, relevant low. Now the market changed the shortened trend, start the end of retracement and start the new down extension. The circle high, it's not confirmed yet until it breaks this low. Why not? Because the market can make lower low, lower high and then gets back up like in here. Can you see it, everybody? If the market makes the next higher high on the circle, did it break the pattern? Type in the chat, yes or no. Boss, can you repeat please? If the market, this was the circle relevant high, but it was not confirmed yet because you don't see the future as you chart and or trade. It's a high, yes, but it's not confirmed yet. It was the end of retracement, the uptrend stopped and started to make lower lows, lower highs, went into a downtrend. But then the market reversed into a deeper retracement and made the higher high compared to the previous circle high. Did this break the blue down market wave? Applause to David. No, exactly, no. If you can learn this, David, help everybody else. If you can learn this, you would not buy the market in here because you understand that this retracement, you know, it's not over yet, okay? Or you would understand that this extension, it's not over yet, meaning this high up in here, it's not confirmed. We still need to fall. Does this make sense? Traders who lost in here, everybody, and it's all good, it's normal, this is how we learn. Traders who lost in here, buying the higher high, traders who lost in here, buying the 75% uptrend, it was because they were thinking, oh, a new retracement is starting. Make sense? A new retracement is going to start only when the new extension is confirmed. And the new extension is going to be confirmed when the market breaks the relevant low. Okay, everybody? This would be, for an analyst with education, this would be an unnecessary loser. You bought in here and you lost. Boss, why did we lose? Well, we lost because we are in extension mode. Make sense, everybody? You are buying something that is going down. Make sense, everybody? So the best entries on the market. Now let's go to how to trade the market wave. The best entries are what it's called end of retracement. Alright? Down market wave. Yeah, we're going to finish, give me a second. Down market wave, the best entry is end of retracement, and you are going to see the end of retracement with the change of the shortened trend. You can see it on the chart and it's predictable to a degree. Okay? Now, fair enough, it's easy for me to give a class and, you know, I'm the big guy because I can see the future, but counter trend line breaking here, did the market change the shortened trend? Counter trend line breaking here, did the market change the shortened trend? counter trend, so this would be a false breakout too, counter trend line break in here. Did the market after the counter trend line change the shortened trend? And lastly, counter trend line break before the market changed the shortened trend? Yes or yes? And the best thing is, everybody, you can see it on the chart. 15-minute chart too. I would not advise you to read the 15-minute chart, but makes sense, everybody? 4-hour chart, daily chart, monthly maybe not, because one candle is a month, but you can see the change in the shortened trend on the weekly, on the daily, on the 4-hour, on the 2-hour, on the 1 hour, on 30-minute, on the 15-minute. You can see it when it happens. Okay? And once you enter the market, if you would put the stop loss on the previous market wave high, would the market stop you out? Yes or no? Like this, alright. If you would put every single time that you've entered the market, if you would put the stop loss on the previous market wave high, would the market stop you out? You enter here, stop loss goes on the previous one. 15-minute too. You would enter here, the stop loss goes on the previous one. You would enter here, the stop loss goes on the previous market wave high. If you would do this, would you win every single time? Type in the chat. If you would do like this, would you or wouldn't you win every single time? We're going to talk about more stop loss levels. David, no. I mean, the market will not hit you. I have a 20 seconds delay on the chat, right, everybody? If you would enter at the end of retracement, and if you would put the stop loss on the pattern that you are trading, this is a rule. Make sense? The market would not stop you out. And the best news ever about the market wave, until the market is going to continue the market wave, it's not going to break the market wave high. Do you want to talk about trading? For the beginner analyst, trading the market wave, this is the easiest pattern that you can trade. Does this make sense? No, you win 70% of the time. Well, if I look at the chart, this is just an example. I mean, of course, David, then the market wave is going to break. See, everybody, this is not always, and it's not guaranteed, it's forever. But David and everybody, listen up. The problem you have, it's the stop loss level. Make sense, everybody? Until the market is going to move with the market wave, is not going to stop you on the previous high. Okay? It's not 70%, it's 100%. Okay? This is not a strategy, and we're talking about concepts. Okay? When you lose, this is the concept. You must, when you enter, you must put the stop loss on the previous relevant high, but you are too smart and you don't like the concepts and you don't like the market wave high, you would put the stop loss down in here, or you would put the stop loss somewhere in between. Make sense, everybody? And just before you finish, this is a great example in here, everybody, where out this one, if you would, just an example, if you would enter the market shorting, if you would enter the market shorting the market wave up in here, because you don't see the future, right? You see the market stop the retracement, start the extension, and you should put the stop loss on the previous market wave high, but you are too smart and you would put the stop loss on this high, you know, because you want a short stop, which doesn't work anyway, you know, and then the market would stop you out. Can you see it, everybody? Just for a few pips. And when the market stops you out just for a few pips, what happens then? Yeah, we are over time, I'm sorry. What happens every single time? David, Olga, Shantana, Javen, Alex and everybody else, what happens when the market stops you out just for a few pips? What happens then? Who is honest enough to type in the chat? It happens every single time. You enter, maybe a great entry, but your stop loss is in the wrong place, and the market goes, first the market goes your way, you're happy, you're smiling, life is beautiful, and then the market goes against you, and it's going to just touch your stop loss, and then what happens? Happened to me too, don't worry everybody, we're all the same. But if I can learn that this is me not obeying the rules, this is me trying to be smart, this is me trying to invent hot water instead of me following what makes sense, you lose money. You're right. What I'm trying to get, what happens next? The market goes your way. Very rarely, for beginner traders, very rarely, the market stops out the beginner trade and then goes reversing. True or true? 90% of the time the market stops you out and then goes your way. True or true? Let's be honest in here. Javen, thanks for being on. Then the market goes your way. I'm not saying I'm not going to say always, but very rarely, because you are still learning how to process all of these price action and relevant highs and lows and trends, and you know, very rarely the market is going to stop you out and go against you like, oh, I was wrong on the direction. What happens most, everybody, is that you are quite good on determining direction. You're quite good already to figure out the direction, but because your stop loss is too tight and most likely in the wrong place, the market is going to go against you, stop you out for a pip or 2 or 15, and then it's going to go your way. And then you're going to see, oh, the market's, you know, now you're going my way. True, sometimes I feel like the market is watching me. Everybody pat yourself on the back. In the advanced course, you're going to learn more about psychology, right? It feels like somebody is, oh, they have the camera, you know, the broker is spying on me, or, you know, all the other bullshits, the broker is stop loss hunting, you know. Not such thing, everybody. Make sense? You can partner up with you, everybody, and you go and study the market. Every single time that you lose, you are going to find that, oh, there was something on the chart that you might didn't see. Make sense, everybody? This is one. And number two, maybe, just maybe, I don't know you online, you are maybe, you know, trying to invent hot water, you know, which is again not uncommon in this business. Okay, everybody, this is the lesson. Download it, rewatch it a few times. You have the homework. See you back tomorrow. I watched the market do this to me for 2 years. Applause to Javen for being honest. 2 years, everybody. 2 years, it's time. Okay? Do the homework. See you back tomorrow. Thank you very much. And I need to get, oops, F11. Remember, you can have or TradingView or JForex, alright? Thank you very much. Do the homework. This is Mike signing off.